So drawdown is a devil, and let's talk about how we handle devils. Let's go deeper. All right, so somebody by the name of Joseph absolutely positively spammed me on several videos for me to do this lesson on drawdown. So Joseph, you were successful in your pursuits, and here it goes. Right here, I'm going to try to help out to look at the drawdown issue. For I'm sure you're not the only one who's struggling with it. I'm actually currently in a drawdown right now, and I'm gonna tell you how I got there and what you need to do. So drawdown. First, you need to ask yourself, why am I in the drawdown? It can be several reasons. I wrote some down. Is the system? Did the system stop working for whatever reason? Maybe the market condition changed. For instance, maybe you've been doing range fades, and then now everything is trending, and you're still taking range fades, and you're on a losing streak. So for whatever reason, you're in a drawdown. Could be the system. Are you over trading? A lot of times it's just downright discipline. Again, it comes back to discipline. You could just be over trading. It's how you got into a drawdown. And then, or were you risking too much? Was it just that, your risk was too high, and unfortunately you took too many trades, in a row, and I really want to talk about risk real quick. I'm gonna pause here before I talk about what to do when you're in a drawdown. We need to discuss how you got there, because if you don't ever look at how you got there in the first place, you're bound to be there again, over and over and over again. And of course, you're always going to have, some tough roles in trading, but you want them to be few and far between. But let's go back to risk, because most people are just risking too much, especially in the binary options market. I see it all the time. Most people are just downright risking too much. Let's say that you're risking 3% per trade. Now, when I say that, 3% doesn't seem like a lot. It really doesn't, right? 3% of your trading account, no matter what the size of it is, if you're only risking 3% per trade, that does not seem like a lot until, everybody say, until you lose 3 trades in a row. Now, after you lose 3 trades in a row, 9% is huge. If you're down 9% of your account in 20 minutes, right? Because we're only taking 3-minute trades. You lose 3 in a row, you only actually traded 9 minutes, and now you're down 9%. So, you may be thinking that 3% is low. No, 3% is high. Risking 3% per trade is high. It sounds low when you only think of it in taking 1 trade. But if you lose 3 of them boys in a row, you are now down 9%. Your drawdown is 9%. Now, let me tell you what else happens after that. Once you're down 9%, what people don't understand is, risking too much is closely connected to then missing good setups, or skipping good setups. Because when you're down 9%, now you're thinking, ooh, I can't go down, or I don't want to go down 12%. I don't want to go down double figures. And so now you end up skipping good setups. You end up skipping good setups because you're nervous, because your emotions are all over the place. It's now your heart is pump, 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 jumping out your chest, because you don't want to go down double figures in a day, in 20 minutes, in 25 minutes, right? So then you skip good trades, and then guess what happens? After you skip the good trade, now you're really down on yourself. You're headed to depression now, because you're down 9%. You skip good trades that could have brought you back, right? But it's because your risk was too high. So that is a demon, okay? That's a devil. Having your risk too high. People are talking about 5% and 10% and 15%. That is nonsense, okay? That's nonsense. I made other videos on this before. Do not risk. If you're new to trading, don't be risking 3%. I'm saying don't risk 3, because if you lose 3 in a row, you down 9% of your trading account. That's major. And like I said, it's going to compound. Then you're going to skip trades. Then after you skip trades, you know what you do? You take a terrible trade, because now your mind is not in it. You're not focused. You're not going to follow the rules. You got this cue, you've been triggered. If you guys read the book I told you, Atomic Habits, you've went from the cue, then you're craving, and then you're going to have a response and then a result. But so you're craving to get that money back now. You want to get it back now. You want to get it back right now, So you throw your rules out the, you're not waiting for a touch off the 21 EMA at that point. No, you want to get it back right now. So you scan and you jump, you take something terrible. I'm just saying, risk is big, because when you're risking too much, everything I just explained goes right back into overtrading, goes right back into your system failing because you're not working your system anymore. So a lot of times you may end up in drawdown simply because you had your risk too high. Okay, so you done messed up. Your risk was too high, or you overtraded. That's probably the culprit. Because if you're trading price action, it's really not the system. It comes down to how you're working it, right? So so a system, we can take that off the table. It's really usually not the system. There's a lot of profitable systems out here. People just can't work them because they don't have the discipline to work them. There's a whole the way I teach price action, I've taught you guys price action. I've taught you guys Fibonacci. People still gonna break both of the rules that I share every day, and they're gonna struggle because you don't follow rules, because you're not disciplined. So a lot of times it's not the system, it's the trader. User error, as we would say in the IT world, user error. So you've messed up. We've all been there. Don't beat yourself up about it. Lower your risk. Find a risk tolerance. Find your risk tolerance. I suggest 1%. If you are really new, you might want to go 0.5. All right. Yeah, 0.5 still makes money. All right. That's the thing. Okay, I'm gonna get to that. So try if you're in a drawdown right now, try lowering your risk. Now here's the thing. You have to make this paradigm shift in your mind. Do not try to get it all back today. Don't try to get it all back tomorrow, okay? Remember that your capital is your business. And so as long as you're still in business, you can come back. But because you made a major mistake and was over trading or had your risk too high, now you're in drawdown. Now that's the consequence of that. But don't compound it by trying to make it all back today. You know what you have to do? You have to just lower your risk, follow the rules of your trading plan. Hopefully you have a good system, and let the system work. And you will pull yourself out of it. But you go down 50% of your account, you're going to have to make 100% to get your money back. Get your money back and flow up. I mean, that's just how it goes. So, hey, don't try to get it all back at once. Don't do it. If you try to get it all back at once, you're going to blow your account out. All right. Like if you made it out of that over trading day, or if you made it out of that day where your risk was too high, praise Yahuwah. You're still alive. You're still in business. Always remember you're still in business. So when you're in drawdown, forget where you were. Now, this is the hard part. This is the mental part. Forget where your account was at. It doesn't matter. It's not there anymore. Don't worry about that. You might have been trading 75 bucks a win. Now you down to 50 or 40 a win. Take the numbers out of it. That's why I like dealing with percents. It helps take the numbers, help take the dollar figure numbers out of it, out of the psychology of it. You're in a drawdown. Your back is against the wall now. You have to be smart in this situation. Do not try to get it all back at one day. Okay, what you want to do is just work your system, right? Because you really should be trying to compound your account. You really should just be trying to grow your account. And so let it grow at the pace it grows at. Whatever account size you are working with, that's the account size you have to work with, right? So don't be frustrated if you see somebody making $200 a trade, $500 a trade, $1,000 a trade. Hey, their account maybe supports that. We all have to, this is, hey, we all have to grow from where we are with what we had to work with. Just work with what you got to work with. Okay. I suggest, again, 1% or less, and you probably will be comfortable. You're going to take the good setups when they come, because you're like, hey, it's only 1%. If I lose this 1%, I still got 99% left. You see what I'm saying? You see what I'm saying? You're still in the game. So just take your, just follow your system. Slowly dig yourself out of the hole. Forget where you were. It doesn't matter. You're not there anymore. Go from where you are today. Follow the system. Take the setups. Only risk 1% or less, and let time work in your favor. You know, eventually you'll make it out of the hole. You know, it may take you a lot longer than you want, but hopefully you got a good system. Hopefully you fix the errors. That's why you have to figure out how you got in Drawdown first, so you can fix the errors that you made, self-adjust, self-correct, and then, hey, take good setups off of the 21 EMA, and however long it takes you to get back, it takes you to get back. So I was mentioning that I'm in a Drawdown right now. What happened for me was that I found this new system, right? Well, not system. I had optimized what I was already doing, but I was testing with the live account. And what happened is I was winning so good that I got the big head, and then I made a few more optimizations that didn't work, and then I started losing, and before I know it, I lost too much. But I lost too much, and then, but I learned. Luckily for me, though, the optimization that I did is what I've been sharing with my students lately of how to find a strong trend. So, you know, I lost too much. Oops, sorry, I got my phone going all crazy here. I lost too much, and it was all on me. It was all on me. So I know why I had to draw down. But you know I was risking too much. So I went back to my 1%. I started with the new strategy that I found, and I haven't had a losing day since. So I'm gonna get out. You know what I'm saying? My drawdown is almost over, but I had to self-correct. You know, but I knew exactly what happened to me. You know, I shouldn't have been testing live heavy. I did it. Okay, I have to own that. I did it. But I'm still alive. I haven't lost since. It still was a blessing. I have received manna from heaven with this new strategy. It is so simple. And so, you know, it's cool. I'm cool. I'm good with it because, hey, I'm climbing out the hole at a very nice pace. But yeah, I caused myself more pain than I should have. If I had just practiced on demo, man, I'd be right now. But it didn't. But hey, I'm build some character, and it was perfect timing for Joseph, who wanted to hear about Drawdown, because hey, I'm just not fighting out of one right now, and I did it to myself, you know, testing on a live account and risking too much, compound problems, compound mistakes, dumb me. But I found outstanding strategy, and I'm digging myself out the hole. I'm back at my comfortable 1%, and boom, I'm rolling. So that's how you do it. You know, find your risk tolerance, start trading your system again. And if you got a good system like our price action system, you'll climb out that hole. So that's how you handle that drawdown demon. All right. So Joseph, I hope that answered your question, or I hope that helped you on your journey. I'm sure everybody else is glad. And you know, hey, that spamming me actually did work. Congratulations, guy. Anyway, thanks for commenting, man. Thanks for being a part of the tribe, Joseph. So let's do a quick work study lesson and hang in to the end. Of course, we got a trade bonus for you. All right, let's check it out. All right, so we're looking at the dollar CAD here, and hey, beautiful trend, right? Beautiful trend. You can see it right out the gate. You know, so hopefully if you catch it here, I wanted to share something. You know, if you kind of see this is one leg pullback, that's two legs. And then this is one leg pull back, two legs, right? So the market cycle, rule of two, is in full effect. But what I really want to show is once you see a strong trend like this, or one strong leg like this first one, you always have to be expecting another leg of that distance. So Oh, that's not right. Where's a bar? Okay, yeah, here we go. So once you get this, you know another leg of that distance is coming, right? You just have to wait for it to the sign that the next leg up is starting. Many times that sign is going to be a break above the EMA with a low, higher low, and or a lower high in reverse. So once you get that break, you go from the bottom here, and look at that. Look at that. Bam. Second leg to the T, okay? Just want to point that out again, that the market moves in twos. So when you get a good trend and you see this pull back here, all you're doing is waiting for a good push above. And so what you get it right here, low. Let me grab a candle. Let's start marking this boy up. Low, push up, higher low right here. Look at this signal candle, people. Look at this signal candle. It's beautiful. Pushed up, nearly closed on its top, closed higher than the bar to the left. Your target is right here. That is go time. 1, 2, 3. It's a win. It scares you, but you won. You know. Then this thing pushed back and couldn't push right back above. I admit I like that. I like that. And it is choppy. I probably shouldn't count it this way, but I'm gonna call this a second entry long. First entry, push up. Second entry right there. Even if it's not a second entry long, I just like it because, again, look at the rejection on this candle. It bounced right where this one bounced. Show rejection. And then this one was off and closed back above the EMA. I like that one. Your target is here and here. You're expecting a leg of this distance. This is why understanding rule of two is so important. You're expecting a leg of this distance, and you show rejection here. You show rejection here again. You take that. But if you want to be conservative, you just wait, because you get another low, push up, higher low right here. And look at this beauty. Close, strong candle, then close on the top, close higher than one to the left. Your target is still here and here, and you're still expecting a leg of this distance. Ah, man, that's a beauty. 1, 2, 3. Okay. But then we start getting choppy. So the best thing to do in this situation is wait for EMA touch, which you kind of don't get. And this is an inside bar. Unfortunately, you probably missed this unless you really understand that you're going to get another leg of this distance. And when this boy here takes off and breaks higher than both of these, I'll go. I will go right there. So I actually wouldn't miss that, because I'm also looking at that as a first entry, push down, second entry long. Once this candle breaks higher here, I'm going on that. And that's the home run of the day. 1, 2, 3. Okay. Some people may saw, and then if you saw, notice how this had no bottom. This had no stem on the bottom, no stem on the bottom, no stem on the bottom. Super rejection, close higher. This is a rally base rally. That's a rally base rally. That is a rally base rally, and it worked just like a rally base rally works. The reason I knew it was a rally base rally is because there's no stem on the bottom here. No, when you get 3 bars, no stem on the bottom, and then you get a rejection like this, and then you get this bar closes up here, that's a rally base rally. Because again, we're expecting another leg of this distance. It's also a repeat pattern. The same thing happened here, but you had the stems, so I probably wouldn't have taken it because this was too far away from the EMA. But that is nothing but a repeat pattern. That is a repeat pattern. But here it's more of a rally base rally, because these things just was open and pushing, open and pushing, open and pushing. That's how you spot a rally base rally. Then we work up again, no touch of the EMA. Actually, I don't take this unless, you know, because we've had the leg now. So I skip this. And then it looked like it was probably going to make a first entry, push down, second entry long here. I'm not sure what happened, but there you have it. Quick and easy. 1, 2, 3, 4, 5. 5 quick and easy ones. Okay. 5 quick and easy ones. And this was the dollar CAD. I think I might have accidentally cut off the top of it over there, but it was the dollar CAD, and that's a great trend. But again, when you see a nice strong trend like this, you're gonna get another leg. It's just all about when it's gonna happen. But your clue is when you break lower and then get back above the EMA. That's a great sign. So this was, and again, like I said, if you don't take this one, it's the higher low is right here. So higher low, high or low, you're off to the races, man. That was a beauty. So this is a good time to like, subscribe, and share. I greatly appreciate you guys. Stay tuned for staying this long. As usual, of course, I have a trade bonus for you. So let's check it out. Now we can clearly see we should be getting this is a trend break, retest, coming here, strong trend. I'm gonna go with it. Let this candle close. It's closing beautifully. My goodness. All right, we're in strong trend. Hopefully we get a rally, base rally, and a trend down, trend break, retest. No, don't do that. Don't do that. Drop base drop. Come on, don't do that. Push down, push down. Close on your low, close on your low, close on your low, close on your low, close on your low. Push down, push down, push down, push down, push down. There you push down, close on your low, close on your low. Ooh, close on your low. Push down, push down, push down. Final candle, push down. Drop base drop. Push down, push down, push down, push down. Push down, push down, push down. Push down, push down, push down, push down. Good win. Yo, that was intense, wasn't it? Whoo, whoo. Hey, I take them close ones. A win is a win is a win, my friend. So, hey, hit that like button if you enjoyed that, and watch this video here to learn some more price action. Till next time, my name is JD, and as always, I wish you increase on the Sutton. Bye-bye.